Hello, everyone. The news we're about to share with you is monumental. Please examine this. A settlement offer was finally made to XRP by the SEC. Some have speculated that the XRP case is finally winding. Ripple's chief legal officer, Stuart Alderodi, reported the settlement offer made by the U.S. Securities and Exchanges Commission before the SEC filed the case as a precaution. Chris Larsen, who is Ripple's co-founder, and Brad Garlinghouse, who is the company's CEO, were all indicted by the Securities and Exchange Commission on December 22, 2020 for allegedly soliciting over $1.30 billion in an unregistered digital asset securities offering. The CSC demanded that Ripple publicly admit that XRP was a security asset and that the company give crypto compliance a short window of time to become client. Ripple was also urged to cooperate with the proposal. Crypto companies in the US have long maintained that the current securities regulations do not adequately account for the unique features of crypto assets. There's been scant action from the Securities and Exchange Commission to create crypto-specific regulations. Contrarily, the court ruled that the alluring settlement condition for XRP to be considered a security was erroneous. In the July 2023 summary ruling, Judge Nellis determined that XRP in terms of retail purchase was not a security. The ruling of the court caused this to occur. The allegations against Ripple's chief executive officer, Garlinghouse, and chief legal officer Larsen were dismissed according to CoinGap. Crypto compliance was never built by the SEC. Alderodi doubled down when he realized the SEC has never established crypto compliance guidelines. The U.S. markets regulator has been unable to establish industry compliance since the XRP case was filed 3 years ago. Coinbase and Binance, two of the most prominent cryptocurrency exchanges, were the targets of legal actions taken by the government agency as part of its enforcement first approach, even though these businesses were being heavily criticized and were escaping the country. Kraken, a cryptocurrency exchange, has applied to intervene in the continuing court battle between Ripple and its plaintiffs, which is another piece of news. This marks a major development in the continuing legal dispute. A court decision required US-based exchanges to provide private transaction data, including XRP traders' identities. Therefore, this move is a reaction to that requirement. A watershed moment for user privacy protection in the cryptocurrency industry came when Kraken intervened in the case launch against Ripple, reflecting the firm's stance on user privacy. The importance of privacy and the risks connected with sharing sensitive information has prompted the exchange to take a stand in protecting its users' data, focusing on the consequences of complying with the exchange's data disclosure order. Kraken insists it is remaining impartial in the court battle. The exchange clearly cares deeply about maintaining its clients' trust because it has decided to challenge this verdict. According to Kraken, the relationship between the exchange and its consumers could be jeopardized if private transaction data is forcibly disclosed. We are not just taking this measure to protect traders on an individual basis. The real goal here is to keep Kraken's good name in the Bitcoin industry and to make everyone feel safe. The categorization of XRP is central to the central dispute in the legal system with respect to the legal argument. The lawsuit, which Vechain is leading, begs the question of whether XRP is better understood as a security or a currency. Ripple subtly denies claims that it is selling unregistered securities while contrasting XRP with established cryptocurrencies like Bitcoin. This already convoluted legal issue becomes even more so with Kraken's existence. The exchange's quest to overturn the court ruling has put user data and privacy protection front and center. The corporation is showing its dedication to its clients and bringing attention to larger privacy issues. By doing this, beyond the Ripple litigation, Atkins' choice to become engaged may have consequences. The exchange's decision to reject the court request may set an example for other platforms to follow, strengthening the industry-wide resolve to safeguard Bitcoin users' privacy. Beyond this, it raises serious concerns about the balance between personal freedoms and statutory duties, which is especially problematic in the dynamic landscape of digital assets. The regulatory approaches used to data collection in the cryptocurrency area could be affected by this intervention's success. The success of Kraken's move might encourage regulators to think about Bitcoin transaction structures that prioritize user privacy. Perhaps this will lead to a rise in popularity of decentralized exchanges and privacy-focused services. The role that Kraken plays in the Ripple dispute goes well beyond that of a mere legal strategy. When it comes to protecting customers' anonymity in the Bitcoin industry, This is a watershed moment. Finally, it forces other exchanges and regulatory bodies to reconsider their data privacy and openness policies. This intervention has the potential to cause a sea change in the digital asset management of personal data, setting new standards for the safeguarding of user privacy and trust. While XRP's price remains volatile below a key resistance level, the cryptocurrency gaming scene is about to be rocked by Nux. The platform is centered around a play-to-earn A2 game that's all about mining for minerals. At a significant resistance level, XRP is suffering. Despite the cryptocurrency market's gradual recovery, XRP has failed to break over a resistance level as of December 19, leading analysts to argue there is evidence on the blockchain that XRP is facing negative momentum, which might lead to a reversal. Traders often watch the 60-cent support zone where XRP is now trading to see how the cryptocurrency is likely to perform in the near future. Although market patterns are often somewhat flat around the holidays, XRP does not show any obvious bias in either direction. Since XRP isn't able to participate in the general altcoins market upswing due to its drastically reduced trading volume, this is one of the most important issues preventing it from making progress. According to Conap, XRP's daily trading activity plummeted last week as prices were rejected around the 68 cents level. There was a $148.4 million decline in volume from December 2009 to December 2019. Despite XRP having breached key support, investors may continue to have faith in the cryptocurrency. Reason being, the price has not dropped noticeably. Potential buyers may be reawakened by the prospect of a recovery from the present levels. Nevertheless, XRP would probably need some good news or new partnerships to raise investor confidence enough for a bullish reversal to occur. A possible settlement in the continuing case between Ripple and the SEC has prompted attorney John Detton, founder of Crypto Law, to provide new remarks. Given the SEC Securities claims against other cryptocurrency projects, attorney Detton recently speculated in an interview with Thinking Crypto that the Ripple case will not settle. The SEC continues to view ADA, Solana, and Matic as investment contracts, according to Detton, who expressed his doubt that the agency will reach a settlement with Ripple and acknowledged that XRP sold on exchanges is not a security. According to attorney Detton, I don't see it happening if the SEC decides that XRP sold on exchanges is not a security, but Cardano is. You may remember that in June, the SEC sued Coinbase, classifying more than 10 cryptocurrencies as securities. Among these were ADA, Solana, Matic, and more, by allowing the trading of assets that were considered investment contracts and by operating an unregistered securities exchange. Coinbase allegedly violated U.S. regulations, according to the SEC. New York federal court handed down the long-awaited summary judgment in the Ripple case 1 month later, ruling that XRP is not a security on its own. In addition, contrary to what the SEC claimed, the court determined that Ripple's program sales and other distributions do not constitute investment contracts. After the final verdict, the SEC may decide to challenge the decision, according to some legal experts, but others think it will settle with Ripple. This is not to be construed as a recommendation to engage in any particular trading activity. Any investments made relying on the information provided in this video are not our responsibility. It is highly recommended that you consult an informed expert and do your own research before making any investing decisions. That's all for now.